Hi, Toby.
Hello.
Hi. Good morning. Hello, good morning. Chinel, can you turn down the music, please? Thank you. Good morning, everyone, and we welcome you to our tax webinar on responsible taxation and transparency reporting, signifying the importance in Nigeria. Today we'll be discussing the importance of responsible taxation and transparency reporting in Nigeria. And lined up for us are very seasoned speakers who will be talking to us about about responsible taxation and transparency reporting and how it's going to affect our operations in Nigeria. And I have with me speakers. We have Martins Aroge, who's a partner in KPMG Tax. We also have Dr. Professor Kenneth Amechi, a director scaling business in Africa, University of Edinburgh. And then we have another of my colleague, Tommy Adeboju, a partner and head internal audit, governance and risk and compliance, KPMG Nigeria, and also someone from the FRS, Mr. Matthew Bonjubola, who is the group lead, special tax operations group, Federal Inland Revenue Services. So it promises to be an interesting conversation, and each of the speakers will be talking on a very key aspect of transparency reporting and responsible taxation in Nigeria. So without further ado, I'll welcome the head of tax, KPMG Africa, and partner and head of tax regulatory and people services, KPMG Nigeria, Wole Obayomi, to give us the welcome and opening remarks. Over to you, Wole.
Thank you, Ikechukwu. Good morning, everyone. I hope you are well. And for some of you, it might actually be good afternoon or good evening, depending on the time zone where you're in. It's my pleasure to welcome you warmly as you join our webinar today on responsible taxation and transparency reporting. This is a groundbreaking event where we are making responsible taxation and transparency reporting the theme of a public discourse for the first time in Nigeria. While more and more responsible companies in Nigeria are embracing ESG and showcasing their achievements in response to investor requirements, we are yet to see them disclose their total tax contribution in their annual financial statements. This is simply because, as important as this is, there is no government policy, regulation, or law mandating such requirement. Policy making and legislative process takes some time, and businesses will be reacting if they decide to wait until compliance is mandated before they begin to fully disclose their tax footprints in terms of the types of taxes they pay, the quantum of each tax, the beneficiary agency or tier of government to which the taxes are being paid, and when. The truth is that the recent unpleasant experiences of some Nigeria's successful businesses accused of underpaying taxes could have been avoided or mitigated if they have been smart enough to publish the data on their total tax contribution upfront. This will have given the authorities the opportunity to see their total tax contribution in advance, rather than just one element in the entire tax universe. So in other words, an agency can only see how much tax is paid to it. It won't know how much tax is paid to other agencies. But in the event that full disclosure is made by businesses about the taxes they pay to who, when, and where, then other agencies will be able to have information as to how much taxes that businesses are actually paying and the contribution they are making to the socioeconomic development of the country. Overall, it will be a cheaper option for companies to actually be making full disclosure of their total tax contribution than for them to having to state their case in response to serial investigations by multiple arms of the government, such as the Federal Revenue Service, Nigeria Customs Service, Revenue Mobilization, Allocation and Fiscal Commission, RAMFAC, Economic and Financial Crimes Commission, EFCC, Office of the Attorney General of the Federation, and the National Assembly. Ultimately, it is desirable to have a policy, law, regulation on responsible tax practices and transparency reporting And it's my hope that through the insights that our eminent speakers will share with us at this webinar, we'll be able to distill ideas that can form the basis of future policy formulation and lawmaking. The agenda for today's webinar has been designed to enable us to achieve this result. In this regard, my partner, Tomi Adepoju, will kick off by speaking on responsible tax as an integral part of ESG agenda. After the poll, our carefully selected panelists, namely Martin Saroge, who's my partner and our renewable energy specialist, ESG tax champion, and Professor Kenneth Amechi will share their thoughts on the importance of responsible taxation to organizations and future prospects. Professor Kenneth Amechi is a renowned international scholar who doubles as Professor of Sustainable Finance and Governance at European University Institute in Italy. That's a recent appointment. He's chair of Business and Sustainable Development and director of Scaling Business in Africa at the University of Edinburgh. He's one of our very best in diaspora. And if this were a fiscal event, I would have asked for us to give him a standing ovation. However, we can improvise with a digital applause. And may I ask you to click on on your keyboard to give him an applause, digitally for his achievements as a scholar in the international sphere. Okay, can I see your applause, everyone? Okay, thank you for doing that. Thank you. After the panelists, we'll have Mr. Sonia Gbojibola, who is an accomplished thought leader on tax policy, for which he was given international recognition as Nigeria's representative on the OECD Inclusive Framework, responsible for addressing the challenges of the digital economy. Is the director and group lead, Special Tax Operations Group at the Federal Inland Revenue Service. We are privileged to have Mr. Gbojibola with us this morning to share the tax administration's perspectives on the journey towards a responsible tax reporting system in Nigeria. This will be followed by a Q&A session, after which I will launch a thought leadership publication on responsible taxation. This promises to be an exciting webinar, and I urge you all to actively participate by sharing your comments and asking questions during the Q&A session. Have a good one. Thank you very much.
Thank you very much, Wole. Thank you very much for that opening remark. So before we go ahead, Wole had graciously outlined the agenda for the tax webinar. So it's going to be very interesting. So we want you to keep your questions ready and find as much time to engage with the conversation. So just very quickly, some house rules, some housekeeping rules. When you're upon joining, your mics will be muted and all videos will be disabled except those of the host and speakers. This is to help us minimize distractions. Also, please put your mobile phones on silent mode to minimize distractions. And when you click the leave meeting, you'll be directed to a questionnaire link. Please give us feedback on the webinar. And for the question and answer session, please, as the speakers are talking, you can submit your questions in the box. And then during the Q&A session, we'll be able to attend to all of them. In putting your questions, if you want it to be directed to a specific speaker, please indicate so in the questions. Thank you very much. And I want to welcome Tomi Adepoju, Partner and Head Internal Audit Governance, Risk and Compliance, KPMG Nigeria, to talk to us on responsible tax as an integral part of ESG agenda. Welcome, Tomi.
Thank you very much, Ikechukwu, and good day, everyone, whether it's morning, afternoon, or evening, wherever you're joining from. I trust we're keeping well and safe. It's my pleasure to give you the keynote speech on responsible tax as an integral part of ESG. So today, I think I have some slides. That's okay. Yeah, thank you very much. So today we really are looking at ESG. As a number of us know, environmental, social, and governance is becoming increasingly prominent with focus on setting sustainable and corporate responsibility targets while creating and implementing a plan to achieve it. Indeed, ESG has risen on the agenda of government, investors, and the public alike. Although a lot of organizations are starting to embed ESG issues into their strategies, there's a lot of challenges with regards to the reporting and the implementation of the ESG goals, particularly with regards to the key metrics that needs to be considered when setting ESG goals and creating a strategy to implement those goals. This is especially applicable for organizations who are just starting out and incorporating ESG concepts into their strategy. And I'm sure you will agree with me that tax is a key metric that's increasingly being adopted by businesses in their ESG agenda. In fact, we are now having growing interest in ESG investment metrics to help understand and assess what constitutes an ESG compliant company. Concurrent with these developments, we are having ongoing discussions about taxation and increased awareness that tax planning is an ethical issue that should not be separated from a company's wider ESG agenda. Furthermore, there is an ever-increasing demand for organizations to be more transparent about their tax behaviors and evidence of the level of tax responsibility they adopt in terms of aggressive tax strategies. Institutional investors are also starting to use this information to make investment decisions. Hence, businesses are expected to increasingly adopt and articulate clear tax principles that are aligned to the broader ESG agenda. And so as a result of this, we will then see on the next slide that we will then see on the next slide that we are also beginning to then see a lot of things that are being considered for enabling tax transparency, even to improve tax reporting. A number of organizations have had to come up with what they consider are the standards for reporting on taxes. For example, in 2019, the Global Reporting Initiative, GRI, released their GRI 207, which is a comprehensive proposal and first standard for measuring tax transparency. Although some people had concerns with this GRI 207, they felt it was overly bureaucratic, and subsequently only a handful of companies signed up to this standard. The World Economic Forum as well then came up with a suggestion of its own framework and outlined the total tax paid as a reportable metric to reflect the corporation's contribution to public finances through direct and indirect tax. The UN Sustainable Development Goals also came up and mentioned that tax is a key metric that needs to be taken into account when contributing to its goals. And of course, the tax transparency is now backed even by global institutions, including the UN, PRI, OECD, and EU. And this discussion is happening everywhere. In fact, tax reporting has increasingly become a data point of interest to investors everywhere. And so in consideration for enabling tax transparency and reporting, I believe at today's webinar, we need to x-ray a number of things as shown on the next slide. First is the fact that different corporations are at different stages of development in terms of tax reporting. Sectors such as the retail sector are under more pressure to develop tax transparency because their operations cut across the globe and everybody is focusing on them. Stakeholders are also getting more aware and are increasingly demanding fairness, equity, and transparency. And taxation has a huge role to play in this area. Businesses and governments also should be ready for the demand for increased accountability across financial and non-financial performances. Tax reporting, when done, should then be meaningful. It must include quality information, not just quantity. It has to be tailored to each company's unique tax profile. And lastly, there is a need to explain tax strategies as a company's overall narrative: when, why, and how those taxes were paid. This is a board level duty and should be viewed as such. We at KPMG recently launched a multi-year program to accelerate our global solutions for environmental, social, and governance issues. We've put this webinar together to facilitate discussions between key stakeholders on this germane topic, as we understand that ESG is an inevitable and important journey to a sustainable strategic and operational model for all organizations. I wish you all fruitful deliberations today, and I hope by the end of the day, we will have some things that we can take away and improve on our tax reporting going forward. Thank you very much.
Thank you very much. Thank you very much, Tommy, for your presentation. So we now have a better understanding of what ESG is and how tax affects and how tax is an integral part of ESG. So very quickly, what we want to try to do is to run a poll. Essentially, the poll is just to get our understanding about ESG and then how tax reporting and transparency, what our opinion on responsible taxation and tax transparency reporting should be. So it's going to be very quick questions just to get our feel. We've dropped the link in the chat box, so you can click on the link to join the pool. We're also going to be displaying the QR code for people who want to use their phones. Okay, so if you're using your phone, you can scan the QR code on your screen, and then it will take you to the page, and then you type in the code, the number 953959, or you can join on slido.com and type in the code 953959. So just give like a minute for people to join before we start. Okay, so the first question there is, ESG should be embedded in an entity's corporate culture. Do you believe so? Whether you believe that ESG should be embedded in an entity's corporate culture, or no, you don't believe that ESG should be embedded in an entity's corporate culture. So let's see. So we only have about, okay, more people are joining. So far, everybody, all the participants believe that ESG should be embedded in an entity's corporate culture. Okay, we have about 43 people joining now. 45. Okay, that's good. So everybody believes, all the respondents believe that ESG should be embedded in an entity's corporate culture. And I guess that's what part of the things that Tommy just finished discussing in her conversation, in her presentation on ESG and tax being an integral part of ESG agenda. So next question, please. Now, what is tax to you? Is it the price we pay for a civilized society, a compulsory levy, a driver for sustainable growth, or all of the above? Okay, so we have 81% of the people believe that tax is a compulsory levy and is the tax we pay for a civilized society, as well as a driver for sustainable growth. So 74% people believe that it's all of the above. 19% believe it's just a compulsory levy and that's it, while 8% believes it's a driver for sustainable growth, and 2% believes that it's a price we pay for a civilized society. Good. Interestingly, in our next presentation, Martin Zaragi will be taking us through responsible taxation, and we'll touch on what tax is, so for us to have a better understanding. But yes, okay, 78% of us believe that it comprises everything. That's fine. Please, can we move to the next questions? We have a couple of other questions, like 2-3 questions, just to get our feel. Now, tax is an important part of which component of ESG? Based on Tommy's presentation, what do we believe tax is? Okay. All of the above: social, economic, governance, environment, social, governance, environmental, or all of the above. Okay, we have 79 people who believe that it's all of the above. 8% believe it's just only a part of governance. I mean, a majority of us believe that tax is an important part of all the components of ESG, and that's interesting, which is exactly what we've heard from Tommy in her presentation to us, in her discussions with us, that tax is an important and integral part of ESG agenda. Next question, please. Now, this one is a very straightforward question. Do you believe that tax is an essential part of ESG or not? So is tax an essential part of ESG, true or false? So far, everybody believes that tax is an essential part of ESG. And this ties into the presentation made by Tommy earlier, that tax is an integral part, not just an integral part, but an essential part of the ESG initiative. The final question, please. Now, we're going to take it up a notch. Responsible taxation and transparency reporting is a welcome development for upstanding taxpayers. Do you believe that or not, or you're still on the fence about it? Let's get your answers. So far we've had 30 respondents, 38, 40, we're about 140 on the call. We would want as much people to respond to this poll question, because it tells us, I feel, about the conversation that we're having today on responsible taxation and transparency reporting. So 98% out of 56 respondents believe that responsible taxation and transparency reporting is a welcome development for upstanding taxpayers, while 2% are undecided. They are neither sure whether it is there. 98% out of 60. Thank you very much. We'll close the poll now, and then we'll take us to. Thank you very much for your responses. So we'll close the poll now while we move on to the next presentation by Martins Aroge, who's a partner in tax, regulatory and people services, and he also a tax ESG champion on the importance of responsible taxation to organizations and prospects. Over to you, Martins.
Thank you, Aike, and thanks everyone for joining this very important webinar. Like Wale mentioned earlier today, it's monumental because it's probably the first time that any organization is organizing something like this, focused on the importance that tax plays when it comes to the ESG agenda and what transparency reporting and responsible taxation as concepts generally mean. So one of the first things I would like to do today is take us through the concept. What exactly are we talking about when we talk about responsible taxation and transparency reporting? Now, everyone knows that payment of tax is a civic responsibility. So every responsible corporate citizen has a responsibility to ensure that they pay the right amount of tax as at when due. There is always the concept in Nigeria that you talk about, why should I pay taxes? What does government do for me? I provide my own security, I provide my own water. So those are kind of concerns and complaints that you typically would hear from the average Nigerian. Unfortunately, there is no element of quid pro quo in tax, even though this doesn't mean that government does not also have some responsibility to taxpayers. That's one point that Professor Amechi is very, very particular about. So I will not steal his thunder by dwelling too much on that particular point. But there is no element of quid pro quo in taxation. Irrespective of what government does, it is our civic responsibility to pay the appropriate amount of taxes and ensure that we do that at every point in time. So when we talk about responsible taxation, it's first of all understanding that concept, that I must, as a corporate citizen, as individuals, pay what is my fair share and what is due from me at the right time. Understanding that principle is the hallmark or the foundation on which the concept of responsible taxation is built. Now, people have always asked the question, how does this interplay between tax planning, tax avoidance schemes, and all of that? Now, there is still a place for tax planning. People are still within their rights to look at their tax affairs and say, how do I structure my operations in order to ensure that I can optimize my overall operational efficiencies, including my tax position. So there is still a place for that within the concept of responsible taxation. So it doesn't necessarily mean when we talk about being responsible from a tax perspective, that you just take money and throw it all out. That's not what we're talking about. We're saying ensuring that there is an understanding of an obligation that you have to society to contribute to your fair share as a corporate citizen through tax, and knowing that there is a time and there is a place where that contribution is necessary, and ensuring that you do that appropriately. So that's what responsible taxation is about. And in order to be able to do this, there are some pertinent questions that you will need to ask yourself, even when you are undertaking tax planning. What are my key objectives? What am I looking to achieve with all of this? If I'm doing any transaction, what exactly are my objectives? What are my drivers? What are the things that I need to look out for from a tax perspective before I undertake every transaction? How will this particular agenda impact my tax position? Does it mean that I pay more taxes? Does it mean that I pay less taxes? Does it mean that I pay no taxes? So what are my primary objectives, and how will this impact my tax position? How aggressive is this position? How aggressive is this position? Is this something that is allowed within the confines of the applicable legislation? Am I going outside of the boundaries of the accepted norm and practices? And is this step that I'm taking, will it impact my tax position in a way and manner where I contribute nothing, even though I would get a significant benefit from the transaction? So these are key questions that you will probably have to ask yourself in order to better understand the concept of responsible taxation. Again, in summary, when we talk about responsible taxation, is understanding that you have an obligation to pay your fair share at the right time, and ensuring that whatever you do, you consistently retain that obligation, and you don't take very aggressive positions that typically put you at loggerheads with the tax authorities, and ensures that you don't contribute your fair share to society. And that also leads us to the concept of transparency reporting. Now, tax transparency means different things to different people. It's not one thing, it's actually a spectrum. The overarching principle is saying, whatever I do, I am confident in the drivers of my decision. So I am not afraid to make my decisions and the drivers of my decision public. So I am open. I want to subject my decisions and its drivers to public scrutiny. So that's the concept of transparency reporting. And like I said, it's a spectrum. For some people, where it starts and ends is basically just ensuring that they comply with the applicable legislation. What does the law say? When am I expected to pay this? What is the rate of tax that applies to each of these transactions? How do I do that? And ensuring that I do it at the appropriate time. So once they comply, to them, they are transparent. Now, it may also mean affirming that compliance. So it goes beyond just paying the right taxes. I'm also then issuing a public statement because I am confident in the fact that I have done the right thing. So I'm able to say to people publicly and affirm publicly, either in my financial statement, in a separate report, that I have complied with the law. And it's something that you see now where a number of investors are ensuring or looking to ensure that the people they do business with are people that are confident to be able to make this public affirmation. So it's a public statement for some people saying we have and we can confirm that we have complied with the law. Now, it could also extend to publishing tax policies, saying this is how we determine whatever tax decision we make, whatever transactions we enter into. This is how we review the tax impact, and this is how we make decisions. So it's a statement of public policy, tax policy. If you look at some developed, or I don't want to use some some countries in the Western world, they've reached the point where the minimum standard that is required from a transparency reporting point of view is 3, where every company is expected to publish what is called a tax policy and say, this is what we do, this is how we determine our tax payable, this is how we determine how much tax we pay as it relates to every transaction. This is the policy that guides each and everybody in this organization with respect to tax. So companies are now required to issue that tax policy and have it signed up at board level. So in some countries, it's already a requirement. So 1 and 2 is pretty much, they've gone beyond 1 and 2. They are now at 3, and they are making it compulsory that everybody gets up to 0.3 and have it signed up at board level. Now, for others, they've gone ahead to say, I want to publish a very robust governance, control, and tax disclosure document. So people see how much taxes I pay, where I pay them from, how it compares with my overall profitability position, how it compares with my other expenses, and how it compares with what I do on a day-to-day basis. What's the guiding principle? And for other people, it also then extends to looking at country-by-country reporting, breaking it to lines of business, and all of that. So it's a large spectrum that covers the gamut of, or the principle of tax transparency reporting. Now, what we advise and what we would like to get to in Nigeria is at least getting to item 4, where people are confident enough to say, I do the right things. And what I do from a tax perspective is primarily guided by principles and policies that are not geared towards ensuring that I underpay tax or I don't pay my fair share. But I have principles, I have policies in place that ensures that at every point in time, I pay my fair share. Now, what you will find in Nigeria today is that because of the fact that people typically don't present significant information when it comes to payment of taxes, there is a lot of misinformation that I would say that is all over town. Now, people talk about the contribution of tax to gross domestic product in Nigeria, and if you ask the average person, a Google search will tell you that the contribution of tax to GDP in Nigeria is primarily 6%. But the question everyone has always asked is what level of information is out there? How much do people know who contributes this 6%? Is it that people don't pay tax in Nigeria, or people pay and information is just not publicly available? My personal opinion is that the information is just not publicly available to determine the right quantum of taxes that people pay and how it contributes to their profitability position and also the gross domestic product of Nigeria. So when you look at the average financial statement today, what you typically will find is that tax numbers are limited to just one line. Just one line. And that's what we'll talk about, we'll focus about in the next slide. You'll find out that it's focused on just one line. That one line primarily only reports what your income tax payable is. And in some instances, your withholding tax receivable position. That cannot be enough. People need to go further in terms of the level of information that they are willing to present. And the reason is not far-fetched. Tax touches all the sustainable development goals. I was looking at the polls from earlier today, where we were asking which part of tax ties into the ESG agenda. Even though the majority of people chose all, nobody chose environmental. But that's not totally correct. Now, today in Nigeria, we don't have a carbon credit or a carbon tax scheme. But in a number of countries, that already exists, where tax is being used to shape the conversation around carbon emissions and the impact of companies' operations on the atmosphere, on the climate generally. So tax primarily covers both the environmental, it's social, because guess what? There is no way that we can provide or ensure that we meet all of the 17 development goals without ensuring that government has the resources to achieve all of this. No poverty, that involves money. Zero hunger, that involves money. Good health and well-being, quality education, gender equality, clean water and sanitation. All of these are issues that would only be resolved by virtue of the resources that is available to government and resources that are available to communities. So when I talk about government, I'm not talking about federal government, I'm talking about government across all levels. So it is impossible to meet any of the sustainable development goals without ensuring that government has significant resources across all levels, that communities have resources across all levels, and this can only be achieved through tax and through the amount that companies contribute to helping government and communities achieve these goals. So it is very, very important that tax and transparency reporting plays a significant role to both the environmental, social, and governance agenda of government, as well as government's ability to meet the sustainable development goals. I won't even say government ability, I would say society's ability, because it behoves on each and every one of us. We are society as a whole. There is no government and corporate citizens and then private individuals. No, all of us as a whole form what is called the community in which we live and the community in which we operate. So if we talk about meeting these sustainable development goals, the responsibility falls upon each and every one of us, and we all have to pay our fair share. And that's why tax, responsible tax, and transparency reporting is very, very important. Now, so let's go to the next slide. Now, why transparency reporting? Again, it ties on to expectations, perception, and relationship. There is a desire from or an expectation that companies contribute their fair share. And I think, again, like I said, that people already do a whole lot, even though, to my mind, it is not properly captured because of the level of information that is publicly available there. But there is an expectation amongst the public. Everybody wants to deal with companies that, to their mind or to them, is invested in ensuring that they also live a better life. So if I have a company that is invested in ensuring that life is better for me, that government has resources to provide me with necessary infrastructure, I would more than likely be more involved in that company's activities. I would more than likely want to spend a bit more on that company's product than its competitors, if I don't think that its competitors have the same level of commitment to me that company A has. So the public has an expectation. There is the issue of perception also. Investors, customers, employee, and even the international community. Over the years, we've heard people talk about some major multinationals that have operated in several jurisdictions and how they made significant money in those jurisdictions and paid very little in terms of tax, even though their employees and even the communities in which they're making this money would use that tax revenue as a basis for improving their quality of life. And it's a cyclical economy at the end of the day. If you live in a place where there is similar infrastructure, where people are able to make particular investments that aid even their businesses, it ends up increasing the amount of resources that people have in their pockets when you have a society that works. And it's with those resources that people can then invest in your products, that people can then invest in your particular company's goods and services. So it's cyclical. When we invest in our communities, it ensures that the people that live in those communities are more prosperous, and they're also better than able to invest in our companies also. And then there is also the social part. It's companies and businesses need to be more socially conscious. Like I said, it also has an economic impact. So it's not just about doing it as charity, because a lot of people think that it's charity, but it isn't necessarily charity. If there are good roads that lead from farms to markets, the people in those communities that are agrarian are able to take their goods to those markets, able to sell them with minimal destruction. Less of their goods perish. They also have more resources. They can then buy more cereal, more of your own goods, and also consume more of your own services. So it is in everybody's interest that people live in a society that works. And for you to have a society that works, it involves resources, and tax is a key driver of government revenue. Then there is also regulation and standard that can also drive responsible tax and transparency reporting. Other than C/C rules that we have in Nigeria today, there are no rules today that make it mandatory for people to disclose their contribution to society. So again, like I said, everyone is limited to the one line that we currently would see in an average financial statement. But that one line specifically speaks to one thing: income tax payable. But we all know that companies pay more than that one line. Primarily, you have the value-added tax that companies pay. For every transaction you engage in as a company, you will pay 7.5% of the value. So if I take your cost of sales, probably embedded in your cost of sales is VAT that you've paid. If I look at your operating expenses, VAT is embedded in it. There's also withholding tax that, even though it's not your tax, it's because of the fact that you've engaged vendors. It's because of the fact that you've engaged people in that community and around that community, that they are also able to pay taxes, which you withhold from them in form of withholding tax. There is PAYE that your employees pay because of the fact that you are able to provide them with that employment and pay them also reasonable sums. There is pension, there is the ITF levy, several levies that people pay that are not properly reported or documented in their financial statements. So all of these people are not aware. I spoke to a company a few years ago, and that's where all of this began to come to light. And this was a company that in that particular year, they had made a loss. So in terms of income tax payable, there was zero. They were also exempted from minimum tax. So you couldn't find, you would have looked at the financial statement and said this company contributed nothing to society in this particular year because income tax payable was nil. But when we then did an analysis of how much they had contributed in terms of all of the several types of taxes that they paid to the local government, state government, and even the federal government that isn't income tax, it ran into billions. In fact, we found out that tax was the single largest expense item that the company had, but there was no way to document that story. Because again, they were restricted to the one line in the financial statement that is income tax payable. So transparency reporting is trying to say, how do I properly document my story? Next slide. What does documenting my story do? How do if I document it, what does it do? The first thing it helps me, that it helps public perception. If people are aware of how much companies generally contribute on an annual basis, I think that they would view a number of our companies in better light. So when we talk about, oh, people don't pay tax in Nigeria, people don't pay tax in Nigeria, at least me as company A will be able to show and demonstrate that I pay tax, and I pay a significant amount of tax across the various tiers of government, and I can document it and I can present it in a way and manner that it is clear to everybody. It also provides a basis for comparison. A lot of times, what you will find is that people, and this is a conversation we have every day with companies across various levels and across various strata, where tax typically isn't a front burner item at boardroom level. And that's because even the board and executive management typically don't have a view of how much taxes the companies actually pay. They know how much income tax they pay because it's a line, again, like I said, in the financial statement, but they don't have an idea of how much taxes they pay as a whole across the various strata. So you go to the local government level, you have environmental levies, radio levies, radio licenses, and several types of taxes and levies you pay at local government level. You go to the state government level, you have the PAYE, you have the economic development levy, the business premises levy, and several other levies that you also pay across that level. You go to the federal level, you have the income tax, which everybody is aware of. You have value-added tax, ITF, NSITF, ECAs, several levies that you pay across that level. But because people are not typically aware of the quantum, because it hasn't been properly put together and structured in a way where the quantum is available to decision makers. There is no basis for comparison. You don't know how it compares with your industry average. You don't know how it compares with your other cost items. And so if everybody tends to focus around, oh, cost of sales. How do I reduce my cost of sales? How do I manage my cost of sales? How do I manage my other operating expenses? But nobody's aware of tax, of the level of tax they pay. And so it is not a conversation that is happening at board level. So this provides you with that information. There's also the impact of regulatory pressure. Today, governments, tax administrators, and corporate entities, there is a lack of trust that typically exists, where everybody thinks that the other person is trying to do as little as possible. But that's not always the case. I know that a number of multinationals that I've worked with, that we work with at KPMG, have very, very high compliance level. They are very committed to ensuring that they do the right things at the right time also. But because they don't have information that makes people see and that they've done the right things, that see or document that level of commitment to doing the right thing, it helps fester this environment, this atmosphere of distrust. And there is constant pressure. So you see that it is the same people who contribute their fair share that consistently get audited over and over and over again. They're audited by the FCC audit, RAMFAC audits, FIRS audits, state audits. And then those who don't do the right things just lock behind the shadows. And the reason why this happens is because, again, it's the guys, these guys who do the right things are the ones that are constantly the subject of attention. But if they can properly document what they do, then government can then focus their attention on those who there is little information around what they do. Nobody knows what they do, how they do it, when they do it. And then the government, again, has always constantly complained anyway about lack of resources to cover the entire field. So if I have information that helps me determine those who do the right things, I can then transfer or limit my audits and investigations to those for whom little or no information is publicly available. Again, there's data available that then helps drive intervention, and it gives everybody, both management and government, a better view of what's happening. Next slide. So what do we advocate for companies? I think the first thing that companies need to put in place a tax policy that someone at board level needs to take ownership of and say, what exactly do we do on a day-to-day basis? And let that policy be available in terms of tax transparency, and make tax a boardroom issue. That's why I said somebody at boardroom level needs to take ownership of that tax policy, and then ensure compliance with all tax obligations. You can't be transparent about what you do if you don't do the right things, if you don't do the right things at the right time. So we all need to ensure that we do the right things, and we do it at the right time. And then we need to document our story. Let everybody see what we contribute to society. Again, like I said, companies, a significant number of companies already do the right things. They contribute a whole lot. But how do they say it? There is a popular saying in this part of the world that as long as the story is always told by the hunter, it would always glorify the hunter. So if you don't tell your story, people will tell the story for you. There will never be a vacuum. So you need to take steps to ensure that you document your story, let people know how much you contribute across the various spectra of taxes. Let it be part of your financial reporting. It doesn't have to be driven by legislation. People talk about, oh, there is no legislation. You have legislation in other countries. So they do it because it is driven by legislation. You do not need anyone to compel you to tell your story. Tell your story because it works for you. Tell your story because it takes regulatory pressure off you. Tell your story because it makes people see how committed you are to communities in which you operate, and how committed you are to ensuring that the people that you provide goods and services to are in a better position to be able to afford those goods and services. And it helps those people become more committed to you because they see that you are also committed to them. And that's what KPMG is looking to help you do, which we've documented also in the next slide. That's the concept of our tax impact reporting, which is an offering that we offer to clients to assist them understand and participate in tax transparency. We want to help you inspire confidence in the communities in which you operate, confidence in tax administrators that you do the right thing because you are able to provide increased transparency in the level of tax disclosures that you make in your audited financial statements. And we have the global expertise to help our clients communicate their approach to tax and tax reporting. It's a data-driven approach. It's compelling, and it presents your tax information and position in an accessible format. Everybody, from an investor perspective, the public, government, and even your employees can see what you do and how you do it. And then there is greater respect for your commitment to the communities in which you operate. And we have experts that are better able to help you tell this story. So I would advise each and every one of us to consider ensuring that we document our story and ensure increased transparency, both from a policy perspective and from a contribution perspective. Thank you very much for listening today. So I hand over to Ike here to introduce Prof. Take over.
Thank you so much, Martins. We've heard from Martins. Tell your story, share your story, both from a corporate perspective and from a transparency perspective. So it's very important that everybody is not just only that you're compliant, but you are constantly telling that story. Just like Martin said, if you don't tell your story as a hunter, nobody is going to glorify you. So you need to make known the impact you're bringing to the society. So at this point, we'll bring in Professor Kenneth Amechi to talk to us on the aspect of government and their role that they play in respect to the importance of taxation to responsible taxation to organizations and future prospect, but this time from the government perspective and what the government should do. Over to you, Prof.
Okay, good morning, everyone, and thank you for the kind introduction, Wale. So if you permit me, can I switch off my video because it's interfering with the slides? But I'll come back during the Q&A session, if you don't mind. Okay, great. So building on what Martins have already mentioned, what I want to then focus on is how it applies to government, because most of the time we want companies to contribute to or pay their taxes, which is fair enough. But in our context, probably we also need to walk back a bit and ask ourselves the question about the purpose of tax. Why do we need to pay tax? What are taxes meant to do? Taxes didn't fall from heaven. I mean, at some point in time, governments and kings decided to introduce tax to fund certain things that we are doing at a point in time. So the other point also to make is that there are some countries that have also decided to minimize the tax burden they have on their citizens because they have resources they can use to address some of their problems. So taxation in itself, I think, needs to be contextualized. There needs to be a purpose for it. It's not just something that should be used because it is there. Maybe if we have the resources that we need to meet our societal needs, there may not be the need for taxes. So I think one of the questions that was asked earlier was in terms of what taxes we are meant for. And I like the one that says taxes are the price we pay for civilized society. And that for me is very, very revealing because that's also another way to showcase that taxation is a contract between citizens and government. But what happens as much as possible, we are trying to encourage corporate citizens here to be transparent. But on the government side of things, it will also be nice to see the government showcase that level of transparency we are asking the private sector to demonstrate. So what I'm trying to present here is not necessarily a critique of government, so to speak, but more like a plea for government to find ways of increasing accountability as a way also of building trust. So in a recent study I did with some colleagues, we found out that there's always this perception that Nigerians don't want to pay tax. And people, I mean, not only in Nigeria, but prevalently, you find out that that problem or that perception is also linked to lack of trust because people don't trust that the government is accountable. Therefore, they find it very difficult to comply. So if the government is complaining that people are not paying taxes and the people have given the government an expo in quote to say, if you show us how the money is used, if you're more transparent and accountable, we'll give you more money. I think that in itself is a no-brainer. The government should then to be that transparent. But the other thing is that if you look at our tax structure or the tax institutions, particularly the Federal Inland Revenue Service, you find out that they will tell you that their mandate is to collect tax. They always say their goals in terms of how much tax they can collect. But if you ask them how the tax is used, they tell you it's not within their remit, which is fair enough. But then whose responsibility is it to show us how our taxes are used? And if we say, if we understand how our taxes are used, and that helps us to, if that helps our compliance, why shouldn't it be? So the point I'm trying to make here is that it would be nice to see how government is also engaging with this. I know there are times the government will publish maybe how the federal allocation is distributed across the states. But is that sufficient? Is that, can more be done? So maybe a way to think of it without necessarily increasing the cost of governance and maybe using existing infrastructure might be to look at the possibility of establishing an accountability desk that will be very much focused on increasing tax transparency and accountability, especially in how taxes are used. It's in the use of it as opposed to the collection of it. Another way also to build trust might be to dedicate taxes to specific development goals. I know we have different taxes that are already doing that. Say, for example, the TED fund, which is education tax. We also have, I think there's one on ICT, for example. So can we do more of that by taking maybe the sustainable development goals? You can say this year we are dedicating the tax we collect to health, providing health infrastructure, or a significant proportion of that. And if it happens and people see it, and next year you say, well, we are dedicating a significant part of what we collect this to that particular year, maybe on education or something else. So that way gradually we build trust and people know that our taxes are working for us. So there is that need to communicate transparency as well as accountability. So, but what is happening in other jurisdictions? Going back to the idea of transparency. In the UK, for example, the emphasis is very much on transparency, and also recognizing that it might be quite difficult to monitor companies strictly and also to collect information on what they are doing. So they have introduced some kind of self-regulation. Or it's not completely self-regulation because it is a regulation that is behind the shadow of government, so to speak. And what they have asked companies to do is to be as transparent as possible by providing the necessary information required. And if we think of the market, a good market is one that is competitive, and a competitive market is one that has the required information to operate. One can then say disclosing our taxes and what we pay is one way of providing information to the market. It's one way of addressing market failure by addressing information asymmetry. So in the UK system, for example, the government decided to ask companies to publish their tax strategies, because if you think about tax evasion or even tax avoidance, it's largely a function of the tax strategies of companies. And these tax strategies have been framed in a very positive sense. Say, for example, tax efficiency, tax planning. And these new names and sexy names are ways of entrenching practices that might run against the intentions of government through laws in relation to taxes. So what the UK government did cleverly is to say, just show us what your tax strategies are. How do you want to play? What's your attitude to tax? How do you manage these risks? What's their risk appetite? And how do you work with HMRC? That's the revenue body here. So in that case, it puts pressure on companies to be much more revealing in terms of their attitude to tax and how they deal with tax. And that's a very clever one because no company would like to put in public some dodgy practices. And as much as, because I mean, tax avoidance is about taking advantage of loopholes in the system. Some people might argue that that's a different way to look at it because if you look at the law in terms of the black and white written the text, some people might say the law is all about the text and whatever is there is what we comply with. So even if we take advantage of some of these loopholes, they are to first they are to our advantage, and also we are complying because that's what the law intends. So by asking companies to be much more revealing in terms of their tax strategies, is one way the government then is using to curtail tax avoidance in particular. The other thing also is that the government have introduced the idea that if you want to introduce something new, if you want to, tax avoidance or tax strategies can't sort of fall into gray areas. So instead of allowing the taxman to have problems with you at the end of the day, they've come up with this idea that if you want to introduce something new, discuss it with us first. Again, it's another way to encourage transparency. But on the flip side of it, this particular law, in terms of one that asks companies to be much more revealing in their tax strategies, they are not looking at the actual amount you have contributed. That's not the point. So you may say, well, it's a drawback, but there are other mechanisms in the system that will help you show clearly how much money you have contributed through taxation. Then if you move to the European Union also is focusing a lot more on transparency, because again, it's one way to solve information asymmetry. And they're encouraging companies, especially multinational companies that have their home countries in Europe, to showcase again how much taxes they're paying. And instead of them reporting on their global tax, they want them to go country by country, show what they do in different countries, and also to show how much tax they're paying in relation to where they make their taxes. They make their profits, because you can make a profit in, say, a developing country, and you don't pay enough tax there. You rather pay the tax maybe in your home country or in other countries where the tax rates are low. And I guess some of us will also be conversant with the global conversation on taxation of multinationals, where many countries have signed up to the minimum of 15%, just as a way to avoid the race to the bottom, which most multinationals often take advantage of. So the point here is that the EU policy or agenda is expected to assist with scrutinizing the tax behavior of multinationals, like I said, especially those with operations in the EU. But we will see this agenda or requirement manifesting in other jurisdictions. So some of these multinationals from Europe are also in Nigeria or in Africa at large, and some of these things would also impact on them, and something to watch. But the other thing also is to think about either Nigerian businesses or African businesses internationalizing. So if they come into this space or the space of globalization or reach out to the European Union, they may also face similar constraints. So I think that's something to watch on the global scale. So let's move to the next slide, please. So the OECD as well is focusing on transparency. So transparency is very key, and I wouldn't overemphasize it. But the flip side of it is that for them to ask companies to be this transparent, the governments are also willing to be transparent. So they have also provided the citizens with the mechanisms to ask for transparency on the part of government and even to access information. So the whole idea about open governance is very much embedded in that. So it's a quid pro quo. So you can't ask companies to be transparent on one hand, and on the other hand, you are not transparent. So that's what I'm saying. As much as we are trying to encourage companies to be transparent, and we're selling all the business case for doing that, the flip side of the argument is also to require that the government should conform or collaborate in doing that. And as a corporation, as much as you want to be transparent, one thing I find missing in our Nigerian conversation in particular is the idea of companies holding government to account. One might sense the danger there because of the institutional context where we operate, and possibly the dangers that might arise from that, or even the fact that some of these companies are dependent on government for business. So that in itself might put them in awkward situations. But I suspect that responsible organizations should also be one that is willing to stand up to government and also demand for accountability. And responsible organizations are also those that are willing to play fairly in the market. And responsible organizations are those that are willing to do the right thing and also support societal development. So we can't talk about responsible taxation in isolation of responsible organizations and responsible businesses. And I want to challenge companies in particular, especially those who have the power and the resource, to engage in what I call tax accountability advocacy. I'm not asking you to vilify the government, but find ways of encouraging, even if NGOs and other actors in the space, to raise an advocacy around tax accountability. So that way we can put government on their toes. And if they're asking us then to be transparent, we can conform. So that way, that's the nature of democracy. That's how societies develop. And democracy in itself is not a smooth ride. It's filled with tensions and creative tensions, I would say. So that way we can get the best from the government as well as from the private sector. So let me stop here in the interest of time, and then we can go back to the main point of the conversation of today. Thank you very much.
Thank you so much, Professor Kenneth and Amechi, for that wonderful presentation. So we've all heard it. Say taxation creates a social contract between the taxpayers and government. So we've heard from both Martins and Professor Kenneth. What both are saying is that both the government and the taxpayers should demonstrate responsibility and then accountability and transparency. So while Martins is saying that taxpayers who are compliant should tell their stories, and Professor Kenneth is saying that government too should show accountability in the way these monies are spent in order to drive voluntary compliance and encourage people to pay the right amount of tax and be responsible, essentially. So thank you very much. We'll go next to a second poll, the questions. So again, for people who are joining us, you can scan the barcode displayed on your screen and then type in the code 611976 to join. There's also the link that has been dropped in the chat box. You can go through the link to join. So we want to have as much people as possible before we join. So we'll give about 30 seconds for people to join the poll before we start administering the poll questions. Again, you can scan the barcode or you type in slido.com and then you type in the code 611976, or you use the link in the chat box, or you can scan the barcode and then type in the code. Okay, so we'll give another 30 seconds for people to join. So far, we've not had much people. We're about 251 persons. So the first question says, voluntary tax compliance is limited because of, is it lack of trust in tax administration, lack of tax accountability, high cost of doing business in Nigeria, or an annual increase in tax levies and charges? Now, okay, the results are still coming in, and it appears more people believe that the compliance is limited because of lack of tax accountability, and others are saying because they lack trust. In fact, it appears all the answers are going between lack of tax accountability and lack of trust in tax administration. So that says a lot, and goes back to what Prof was describing, to say that tax creates a social contract wherein both the taxpayers and the government have responsibilities, and government needs to demonstrate that they also and a level of accountability in order to ensure the taxpayers have confidence in both the administration and what the government is doing, and to enable them to be more voluntary compliant in terms of their tax obligations. But that is not an excuse not to become responsible, not to practice responsible taxation like Martins has described. So the next question. Transparency reporting can help to improve tax administration. Do you agree or not? Let's see your responses. Okay. That's very interesting. So a good number of us believe that, yes, it will improve tax administration, whereas few people are saying they don't believe it's going to make any difference. Whether you do a transparency reporting or not, that is not going to make a difference. That's an interesting view. Okay, let's get to the next question, please. Do you think tax can play a role in achieving net zero emissions globally? This one has to do with the agreement signed by the president recently that signed Nigeria into an agreement to have a net zero emission by 2030. Do we think that tax being an integral component of the ESG initiative can help to achieve this, maybe through tax credit incentives to promote zero emission? Do you think tax can play that role in achieving net zero emission globally, both Nigeria and globally? Okay, most people believe yes. So a lot of people are saying, I need to be fully educated before I can decide, which is a very prudent response. And 14% are saying, no, I don't think it's going to help. Okay. Thank you very much for your comments. And next question, please. Government has a strong role to play in advancing responsible taxation and transparency reporting practices in Nigeria. Do you believe that? Yes or no? Or you still need to be convinced? You're still sitting on the fence. Okay, so we have about 55 people, and out of 60 respondents, 17. Okay, reasonable responses, and out of that, 97% are saying yes. They believe that government has a strong role to play in advancing responsible taxation and transparency reporting practices in Nigeria. Just 1%, both 2% are saying no, and 1% saying no, and the other 1% is saying, I still need some convincing. I mean, it shows you that we both the taxpayers and the government, there's a disconnect in terms of trust and how they, both the taxpayer and the government believe that each other should behave in terms of responsible taxation and transparency reporting. Next slide, please. Next question, sorry, next question. Transparency reporting can help to improve tax administration. Do you agree? Yes, or do you not agree? No. Okay, so majority of us believe that transparency reporting can help tax administrators improve tax administration. Now, there are a lot of other things, there are a lot of pointers that Martins during his presentation made in respect to this. And I agree with people who believe that, yes, it can help to improve tax administration because it allows government tax administrators to narrow, to deploy very meager resources to the outliers rather than the people who are compliant. So in my opinion, too, I believe that transparency reporting can help to improve tax administration. So thank you very much for your contributions and comments. Having had this, the 2 questions and responses, it will be interesting because it's going to feed into our next presentation by Mr. Matthew Bunjubola, who is the Group Lead, Special Tax Operations Group, the Federal Inland Revenue Services. He'll be talking to us on towards a responsible tax reporting system, the role of tax administration. We welcome you, Mr. Bunjubola.
Thank you very much. I don't know if you can hear me.
Yes, we can.
Okay, thank you. And thanks for the privilege to be part of this discourse. Maybe to start with, do you want to tell me how many minutes I have so that I don't overrun?
Okay, you have 15 minutes.
15 minutes, okay, thank you very much. I don't know if I will have your permission to share my screen. If not, it's
yes,
not,
please go ahead. Go ahead, you can share. You've been granted the thing to share.
Okay, okay, thank you very much. And let me apologize ahead because I have been so much. I understand I cannot share the screen. That's what it has told me here. So I want to apologize for I am in the middle of many things. And so I'm not sure if I'm going to be able to stay until the end of the program. But I have been asked to speak on responsible taxation, and particularly I'm going to be looking at it from the angle of tax administration. And very thanks to colleagues who have shared their thoughts on ESG and on responsible tax. From the point of view of the administration, we see responsible tax as transparent, sustainable, developmental, and all-inclusive approach to tax issues. And that talks about the tax policy, the legislation, and administration. And we believe that responsible tax will require commitment of all citizens, be it corporate or individuals. It will require that we have honest compliance in terms of disclosure and payment of taxes. And very importantly, we believe that responsible taxation will also require a very transparent and inclusive tax administrative practices. This is the way we'll see responsible taxation within the, from the lenses of the tax administration. However, we also understand that a very important element in responsible tax is responsible tax reporting. And when we speak about responsible tax reporting, we are looking at the issues around preparation, presentation, adequate disclosures of tax transactions.
Hello, sir.
Or
you can share
financial
your
positions of.
Okay. You'll be able to share your screen now, please.
All right. Let me make a last-ditch attempt. Okay. All right. Thank you for the privilege. I hope you are able to see my screen now.
It's still coming up. Yes,
sorry?
We can see your screen now.
You can. Okay.
Yes.
Okay. Thank you very much. Okay. Let me just make it a slide show so that it becomes bigger for everybody to see. Oh, great. So I was just saying that a very important element in responsible taxation has to do with responsible tax reporting, and which encompasses the activities around the preparation, the actual presentation, and the contents, and that speaks to the disclosures, that we ensure that the tax affairs of the taxable person is presented in a true and fair manner. And this will require the taxable person intentionally, willingly, voluntarily, correctly, and truthfully comply, and that has to do with the disclosure, the self-assessment, and payment. And a very critical element in all of these is the disclosure and ensuring that all necessary information and documents is provided along with the along with the tax returns that is filed. Now, thanks to our colleague who has spoken earlier as to what benefits, what we get from responsible taxation. But there are a number of objectives that we can meet by practicing responsible tax reporting and also taxation. It starts with being aware of the rights and duties in tax filing. Everybody needs to have a clear understanding. Having a very good mechanism, and this is on the part of the tax administration, for returns and for monitoring. And part of what it does is a good image that it gives to the taxpayer and also the tax administration. And of course, by that, we have impact on the community, on the people, in the way revenue is available for government to carry out its responsibilities. And when we talk about a responsible tax return or responsible tax reporting, it is that one that will lead to payment of correct taxes, the one that is properly addressed, properly delivered. One of the things I found amusing in Nigeria is that people mixes FRS with FRSC and with RRS, and sometimes you laugh when some as highly educated as PhD holder does not know the difference between FRS and FRSC. Sometimes you laugh inwardly. It must be a report or return that is done timely within the law, and it's easy for everybody to understand. I remember going through the tax return of an entity, and it was written in not in the English language. Don't let me mention the language in which it's written. It's one that is transparent with all disclosures and readable in a very legible way, and it's not fraught with irregularities, whether committed or omitted, and it is detailed and analytical. So there's you are able to derive usable statistics from them. But then when we talk about responsible taxation and responsible tax reporting, it is a shared responsibility. It is shared among all relevant stakeholders. For example, from the taxing authority, and I use the word taxing authority, not the tax authority, the taxing authority. That's talking about the government, whether the parliament, the executive, the tax administration itself, and those who are responsible for tax policy. So the taxing authority, what are their roles? It's important that they formulate clear and precise tax rules. This is one area that I'm sure we are making efforts as a country to improve, and we must improve. That our rules must be very clear, must be very concise, must be very precise, and should not be ambiguous. It must not be ambiguous. There must be periodic and constant taxpayer compliance and examination. Where there is no police, anything will go. And so there must be adequate policing to ensure that the people do the right thing. There must also be a efficient tax compliance system. I mean, the administrative system installed by the tax authorities must be efficient. I know that FRS is making very bold steps in this area. We are installing the Tax Pro Max, which enables taxpayers to file their returns. We are not yet perfect, but we are very, very hopeful that in not very long a future, not distant a future, we will get the what we work perfectly for us. There must be constant taxpayer education, not just as to their obligations only, but also as to their rights. And I also believe that every tax authority should publish the Bill of Rights of taxpayers, so that let them know what is their rights, what services they have access to without having to pay for, and all of that. And then it is important that there are tax policies that will enable tax certainty in the system, that will promote transparency in the system. I heard the previous speaker talking about the way the way governments spend tax revenue. It must be transparently done, and it must be to the benefit of the people who have paid these taxes. So I cannot agree more with him along that part. So these are supposed to be the roles of taxing authority within the context of transparent tax reporting. But also the taxpayers, the tax professionals also have their roles. The taxpayer must take responsibility to ensure timely filing of all reports, and must be very open to learning about taxation, because this is very key. This is a subject that many Nigerians don't want to hear. And they must be careful not to seek to induce tax officials for undue advantage. This is some of the temptation that tax officials at every level have to contend with. For professionals, it's important that they should help taxpayers to understand their tax obligations. They have a role to play in discouraging aggressive tax planning. And I was very glad listening to the first presentation, talking about the different classes, types of compliance. I think gone are the days when we continue to refer to say, oh, a taxpayer can arrange an affair in such a way as to minimize his tax. We are now in the era of responsible taxation. And so we should seek to do the right thing, not catch me if you can. The tax professional must also be exemplary. They must be ambassadors of taxation in their own right. So all of these are very important. And then finally, these are talking of the various reports, so I don't have to go through this. We are all very familiar with this. What is expected from corporate taxpayers in terms of reporting. But let me end with this slide. The Federal Inland Revenue Service is in the middle of a number of initiatives. Part of it is we have decided to enlarge our stakeholders' engagement. And I'm sure many people on this call will testify that they have had to be involved in a number of drafting the tax rules, providing guidance and all of that. And so we have embarked on this deliberately as a way of carrying everybody along. We are also working very seriously with other stakeholders to make the rules clearer. If we'll take a look at the Finance Act, the last two, the third one is in the making now, you will see that the language, the definitions, and things are getting clearer and clearer. We are moving away from the days when a single, we use one sentence to cover half a page in the tax laws. We are trying to simplify the tax language and to make it clearer. This may not yet be known much outside, but FRS has taken steps to begin to install infrastructure, ICT infrastructure, that enables back-end validation of tax returns, connecting with financial data that are available from the relevant stakeholders. This is going to be a game changer when we 100% go into STEAM. Compliance activities are getting more purposeful. The time we spend chasing everybody, we are now going to be targeting specific non-compliant taxpayers and also specific issues. And finally, the FRS in the immediate coming year, we start to accredit tax agents. So you want to work with FRS, you want to be a tax agent with respect to taxes collected by the FIRS, you will have to go through accreditation to ensure that you do what you say you are supposed to do and what the law also demands that you do. Let me stop here and let me thank you again, everyone, for listening. God bless you all.
Okay, thank you so much, Mr. Matthew Bonjibola of the FIRS. Like I said, Mr. Matthew Bonjibola is the group head, is the group lead Special Tax Operations Group, Federal Inland Revenue Service. And thank you for the wonderful presentation towards a responsible tax reporting system. You've outlined the role of tax administration. You've mentioned a couple of things, and I know that our participants are buzzing with questions that they need answers for, whether it's for the KPMG team or the FIRS team, speaking collectively on this responsible taxation and transparency reporting. I have a couple of, so we're now on the question and answer session. I have some questions here already, and I'm going to read them out and direct them to the appropriate speaker. So this one is to Martins. To say, thank you, Martins, for walking us through the basis of responsible taxation. However, the concept of not getting commensurate amount of benefits does not give the manager of resources the courage to connect development from taxation. This has the propensity to challenge compliance, which has been evident over the years in our client. So the question is, where do you place development and taxation?
Thank you, Ike, and thank you, Benga Falano, for the question. They are Siamese twins, if I may use that term. It is impossible to have proper development without resources. Development is primarily driven by the amount of resources that's available. And again, like I always say, we've run a system where for a very long time, we more or less relied solely on revenues from oil and gas for development. I think one of my partners said this a few years ago, and it can't be more apt now, that tax is the new oil. So we don't earn as much as we used to compared to the amount of issues that are prevalent in our society. So government has to find a way to get more and more people compliant from a tax perspective. And so there is a link between government accountability, showing that this is what tax revenues have been able to achieve, and then getting people to be voluntarily or to get more compliant voluntarily. So yes, there's a link between development and taxation. If we can get more people to comply voluntarily, it would also provide more resources to government to be able to then help us with our development challenges. But again, there has to be a bit more transparency in how we contribute and a bit more accountability in how government then utilize that contribution to aid development. So companies need to be a bit more open. If everyone can see how much government is getting, or the various states of government are getting from companies, because the information is now readily available, these people can then even place a bit more pressure on government and say, you can't say there is no money. I just picked the financial statement of company A, and I saw how much as a local government you got from them. I saw how much as a state government you got from them across the various types of taxes. I saw how much as a federal government you got from them. So you can't say that there are no resources to get this done. So companies need to be a bit more transparent, government needs to be a bit more accountable, and then we can get our taxes working for us to aid development. Thank you.
Okay, thank you very much, Martins. Thank you very much, Martins, for that response. The next question is actually to Prof. He says, a lot has been said about the concept and idea behind taxation being a compulsory labor that people need to compulsorily pay. However, little has been said about the responsibility of government with respect to key principle of taxation. And with respect to key principle of taxation, and tax efficiency, meaning utilizing the tax monies for its particular purpose, especially in this part of the world. How can we make the government accountable to taxpayers and ensure high level of transparency in the way they utilize tax monies?
I think that's really a question to our brother Matthew. So, because I mean, from FIRS, how can FIRS the mandate be expanded to include accountability? Because as it stands, the FIRS mandate is to collect revenues, right? And if you ask them about accountability, they say, well, it's not within our remit. We don't have the authority to do that. So maybe I would like my brother to reflect on it if he doesn't mind.
Okay, so Mr. Matthew, do you want to make a comment on this, the question?
Yeah, thank you very much, Ikechukwu. The business of responsible tax hand to hand involves everyone. It starts with the taxing authorities, which is the government. It also ends with the government. It starts because they make the rules. They tell us what we are to do, how we are to do it. They collect the money, and they also spend the money. But supposedly spending the money on behalf of all of us. So it all starts with the government. It all ends with the government. But then the question is, who is the government? The government is every one of us. We put the government in place. We elect the people. So at the end of the day, it starts with us, it ends with us. And so we shouldn't look at government or governance as a group of people. No, that exclude us. No, it doesn't exclude us. All of us are responsible. All of us are involved. And this is where it is important for every one of us to play our role, whether in putting in place the right persons to run our affairs, or in also complying with our obligations for taxation. So this is the way I would want us to look at this. I don't know whether I'm able to satisfy the inquirer, but in my view, it is all of us are involved in this. All of us must play our role. Thank you.
Okay, can I come back to that? I mean, I like Matthew's point, but saying it's every person's problem, I think it's a way of ducking the problem, So, because, and yes, every person is governed, but we are not all doing the same thing. So you are at FIRS and I expect you to do your work, which is in terms of tax collection. You can't say tax collection is every person's job. So tax accountability also ought to be somebody's job in government. So, and if we have an office, say for example, I was talking about having a desk on tax accountability. In the UK, they have office of something to do with auditing or something like that, but it's also about public responsibility, making sure that the government works, the government does what it's meant to do. So, but if you think of our system and our governance structure, who in government, which part of government, is it budget and planning, is it finance, Ministry of Finance, that is in charge of ensuring this communication and accountability to the people, to the citizens? Which element of government can do that? I think when we start to get to that point and look at the structure we have at the moment, and I agree with you, it's about the people, it's about everyone to a large extent, but at the same time, we need to have a system in place to enable people hold the government to account. The only way we have at the moment is this 4-year cycle of elections, and we know what elections are in Nigeria, and there is also a great disconnect between people and government and democracy. So how do we restore trust, and how do we empower people to hold government to account? As long as that mechanism and structure are missing, I think we will still miss the point. And saying it's everyone's problem or everyone's responsibility is fine, but in practice is saying almost that we are in for it, we are on our own, so to speak.
Thank you very much, Professor Kenneth and Mr. Matthew, for the responses to the question. Somebody has to take responsibility just like a professor has mentioned, the collection of taxes is out of the FRS, but the suggestion is that someone else takes responsibility for promoting tax accountability on the part of government. And I think that's a very interesting, development that we should look into to find out how, because everybody is interested to know how we spend, how the monies contributed both by corporate at the federal level by corporate taxpayers are spent, and at the state level individuals are spent. So I have another question here, and it's to you, Mr. Matthew. It says, what is FRS doing to help future remittance compliance and transparency by allowing withholding tax credits to be issued? Hello, Mr. Matthew. You're mute, sir. Can you unmute yourself? Mr. Matthew, are you still there? We can't hear you.
Hello?
Yes. Okay, we can hear you now, sir.
Hello?
Yes.
I'm there. Network, so.
Yeah, oh yeah, I thought as much too. So the question is, someone is asking what the FRS is doing to help future remittance compliance and transparency by allowing withholding tax credit notes to be issued. And I think the person is asking, I guess, is in respect with dollar-denominated withholding tax credit notes. So please, I would like your comments on that.
Right. All right, thank you very much. And that was why I got lost somehow. Thanks. I think I saw the question flashing the chat box when withholding tax. I must admit that we have had serial failure and which has led us to should not be an issue at all. However, I can tell you what FRS has done and what it's still doing. Now we have installed a brand new system for withholding, such that our plan in the hopefully maybe from next year, if we are able to complete the systems, that we will not even require to issue withholding tax credit notes anymore. Such that when withholding tax is deducted from the payment due to a taxpayer, the amount automatically goes to the credit of his tax account. And when assessments come in at a later time, they go to the debit of that same account, and then whatever is the difference, the taxpayer just come and pay. And then you can request for your tax account as if you require your bank statement. This is where what we are doing to solve this problem on a permanent basis, not just adopting ad hoc solution. So this is what we are doing. Yes, I must admit that in the past, we have missed a lot of opportunities to put things right. But now that is what we are doing. We're already installing the systems. And I'm sure by the time we are done, I believe that in future programs like this, nobody's going to be talking about withholding tax credits. I don't know if I'm able to attend to that clearly. Thank you.
Okay, thank you so much, Mr. Matthew. This ties into the comment you made about the FRS initiatives, I want to believe, on validation of tax returns. And the next question too was related to it. So I guess the answer would be the same, because the person is asking on the Tax Pro Max team refusing to upload verified and validated withholding tax credits to taxpayers' a profile on Tax Pro Max. Do you have any comments on that, sir?
What I can say is, if you have such an issue, please, you can get in touch with the office of the executive chairman. If you know my office, you can let me know. You can write. You don't have to come physically. You can just send your letter and all your issues, and then we will attend to it from here. So I know that the tax pro team may be overwhelmed with the various activities they are engaged in. So, and they are not regular tax persons. They're not tax officers. They are essentially ICT professionals who probably may see attending to queries on withholding tax credit and whatever as distracting them from their core activity. So if you have such an issue, you can write and attach whatever evidence you have, address it to the group lead, Special Tax Operations Group, or you can address it to the Director of Tax Policy. I can assure you it will be worked upon. Thank you.
Okay, thank you so much, sir. We still have about 5 minutes to the end of our Q&A section. I think most people, the questions people are asking are relating to the implementation of the Tax Pro Max, because I've seen another person who's asking questions regarding asking whether the current platform will not be shut down. What is the assurance that the current portal will not be shut down like the predecessors? And the next question is saying, please, can withholding tax not be downloaded again? And a lot of withholding tax credit are still outstanding. How do we get them to enable us to apply them?
All right, thanks very much. With Tax Pro Max portal be shut down, I'm not able to answer that question in either the affirmative or the negative, because we are told that the only thing that is constant in life itself is change. That is for now.
Okay, I think we lost you for a moment. We lost you for a moment there, so I'm not sure people heard the last comment you made. Hello, Mr. Matthew. I think a bit is bad, so we've lost you for a while there. We didn't really get.
Are you able to hear me now?
Yes, we can hear you now. So please, can you repeat your response to the question? We didn't hear you.
Okay. What I said is that there is no straight answer to that question. As of today, the Tax Pro Max is the platform we're using for tax administration. It's possible tomorrow we have a better platform or acquire a better platform. Of course, we will migrate and shut down Tax Pro Max. That's what I mean. But for now, this is what we use for now. And we have no intention of abandoning it. We have no intention of going back to manual administration. So I think that is the way we answer to that, to give assurance that we have moved to the digital platform and we are going to remain there. Whether the name is going to be Tax Pro Max or something else is a different matter on its own as time goes on. That's okay. My response. Thanks.
Thank you so much, sir, for that response. There are a couple of questions here, though. I want to ask, this one goes to Martins. It says, transparency and accountability are KPIs addressed now from the revenue side. What's KPMG's view in addressing transparency and accountability on expenditure side? Martins, do you want to have a take on that?
Yeah, thanks, Ike. Transparency is what you say on the revenue side and the accountability side. I think is all encompassing. Being transparent and being accountable on the expenditure side is also very, very important. As it's important from the revenue side. So while we expect companies to be accountable, while we expect companies to be transparent, we also expect governments that would have these resources and then would then have to expend it to also be transparent and also be accountable. So it works both ways. But you can't say again, because government is not being accountable or government is not being transparent. So therefore, I would also be opaque in my own dealings. And one thing we've also seen is that when companies take the initiative and become more transparent, it places pressure on government to also do likewise. Now it's easy for government to say, how much do we make from taxes? It's not very significant. Nobody knows how much local governments make from taxes. Nobody really, we hear about what states make from IGR. How do those numbers compare? There is really no independent way of verifying all of this information. But when companies then become more transparent, the same way I can pick up an audited financial statement today, I can tell you what the company made from sale of goods. If I can have an idea from that same document, how much they've paid to the various tiers of government, it also it then transfers the responsibility, or it puts a bit of pressure on government to become more accountable, to become more transparent also, because people now have information that gives them access to what companies are contributing on an annual basis. So it is, companies cannot on their own decide and say, we will not be transparent, we will be opaque because we don't have access to what government is doing. Companies need to take the initiative, become more transparent, become more accountable, and then that transfers the pressure onto government, and government can then begin to take the cue and then begin to demonstrate that this amount that they are collecting, this is how they are administering it, this is how they are utilizing it for the benefit of each and every one of us. Thank you.
Well, thank you very much, Martin. That response there, people need to take initiative, taxpayers need to take initiative to be accountable, responsible, so that they can transfer, so they can more or less make the government to also become more accountable and transparent in how our tax revenue are being spent. Thank you very much for that response. There are lots of questions here, but most of them relate to withholding tax, which I think Mr. Matthew had talked about. That what the FRS is doing to be able to ensure that people are able to download and utilize their outstanding withholding tax credits. He said it's not a perfect system, but they are working very hard on it. So I want to ask the last question here, because there are still other couple of questions, but time is not a friend. So I'll just take this one last question before we go to the next agenda. What is the impact, Martins, this one also is to you. What is the impact of global minimum tax on foreign direct or indirect investment in Nigeria? Do you think it has any impact, the global minimum tax?
I think it will have, yes, I think it will have an impact. Generally, the number of considerations that companies take into account when making a determination as to where they make an investment. Tax is obviously one of those considerations. That's why you hear people talk about tax havens, and also the issuance of things like pioneer status and all of that, because people want to also ensure that from a tax perspective, there is also they are business friendly. Now, if you take out the tax consideration because of the impact of the global minimum tax, what it means is that other factors become a lot more important, one of which will be the availability of infrastructure. So the question again ties into how have we utilized, or how do we utilize what we collect today to ensure that we are also able to address other challenges and also other considerations that companies will take into account when making investment decisions. What kind of infrastructure are we investing in? How is the general compliance rate? So everybody knows I'm going to pay minimum tax, but what's the compliance process? How easy is it to pay those taxes? Would I be bombarded repeatedly by various agencies looking to audit the same number of years, the same records, looking at the same thing? Will I spend all of my time doing all of this? What role will tax transparency reporting also play? So if I put all my records out there and everybody has it, does it help me engender trust so that I can then focus on my core business? So yeah, it has an impact in the sense that it then highlights the importance of every other factor other than tax rates that companies take into consideration when making investment decisions. So it's up to us, it's up to government, it's up to us as a community to collectively then insist that our taxes are then used to improve infrastructure, and then makes the fact that we have a global minimum tax rate, which will then serve as an equalizer. But we then have other factors that we have in our own favor that still encourages investors to come and invest in our communities. Thank you.
Thank you very much, Martin. One word you said during your response resonates with me, which is to engender trust, both in tax administration and then because it goes both ways. While taxpayers need to trust the tax administration and the government and tax administration also need to trust the taxpayers that they are being responsible in their civic obligations. Thank you very much for your responses. This is where the much questions we can take at the moment because of time. The rest of your questions, we try as much as possible to send it to the appropriate people to provide responses to you, and we'll share it much later. So thank you very much, everyone, for participating in the Q&A session, and thank you thank you to the speakers who have responded to it. So right now, I hand over to Wole Obayomi, the head of tax KPMG Africa and partner and head of tax regulatory and people services KPMG Nigeria for the launching of our thought leadership publication on responsible taxation. Over to you, Wole.
Okay, thank you so much, Ikechukwu, and thanks to all the speakers for their contributions at this seminar. We also appreciate all the participants for the questions and comments during the Q&A session. It's at this stage we want to launch the task publication by KPMG, which we did in association with University of Edinburgh Center of Scaling Business in Africa, ably led by Professor Kenneth Amici. The publication is entitled Responsible Taxation: Evaluating the Benefits of Tax Transparency, Reporting to Nigerian Businesses in Changing Times. In an evolving area such as responsible taxation and transparency reporting, there's need for scholarly and professional publications that can help the government to shape future policy, legal, and regulatory framework in Nigeria, and how businesses can position themselves for that eventuality. It is my hope that our modest effort in publishing this thought leadership material will generate the interest of the government as a policymaker and regulator, and the business community on responsible taxation and transparency reporting as part of their ESG agenda to show that they are making meaningful contributions through tax to the socio-economic development of Nigeria. It's on this note that with the honor and privilege conferred on me, that I hereby launch our maiden publication on responsible taxation, evaluating the benefits of tax transparency reporting to Nigerian businesses in changing times. Now, can we unveil it? Right. So this is it. And
yeah, you can use the barcode to scan. We'll also drop the links in the chat box so you can download a copy of it. But you can scan on your phone, then with the barcode displaying on your screen to download it using your phone.
Also, in addition to that, it will be shared through our mailing list for those of you on KPMG newsletter mailing list. So expect to see it in your mailbox as well. So thanks everyone, and Professor Kenneth Amici would like to thank you so much for bringing this Scaling Business in Africa department of University of Edinburgh to collaborate with us on this maiden publication. We hope that we can always count on you anytime we want to do anything together again. Thank you.
Yes, I'll count on you as well. Thank you very much for the invitation. Yeah.
All right, thank you so much, Wole, and thank you to all our speakers and participants. It's been a pleasure hanging out with you to discuss this very important topic, an initiative that is making waves in the world. Everybody's talking about being responsible corporate citizen and then transparency reporting. And we thank you for your participation, for the questions you've asked, and to all our speakers, and Mr. Bunjibola from the FRS, thank you for your time, sir. And we believe that we have not just only made an impression on your mind, but also giving you food for thought on how to become responsible corporate citizens, and to also embrace the idea of voluntary transparency reporting to ensure that you tell your story, just like one of the speakers said, you tell your story you document your compliance, and then you improve your social credibility and social equity. It is very important to us that we do this public-private partnership to ensure that we develop critical infrastructures in Nigeria and ensure that everybody, both from the taxpayers, they are compliant, and the government is demonstrating adequate accountability towards the taxes they have collected. So on this note, I would like to appreciate everyone again and then wish you a very happy rest of the day. Thank you very much for your participation.